And then Trump comes out last night on Easter Sunday with a tweet on Truth Social, and it says, let me just read it verbatim. I'm sure a lot of you have seen it, but for those of you who haven't, he says, "The golden rule of negotiating and success, he who has the gold makes the rules. Thank you." And that was at 3:09 p.m. on Easter Sunday. What the hell does that mean? Does that mean what we think it is? To me, gold is being reintegrated into the system. It's not reacting, it's reintegrating. And case in point, any of you who own gold, take one of your gold coins, go out with some of your buddies and drop a coin on the table and ask them, hey, what is that? And they'll say it's gold. That might be as far as the discussion goes. The retail public is totally sleeping. This is being driven by sovereign wealth funds, central banks. Super interesting too, because as you know, I've talked about ad nauseum, the U.S. has now become a net importer of gold. 60 million or more ounces that we know of have been imported since November, probably a lot more. Massive deliveries onto COMEX, and then President Trump out of nowhere, you know, and again, what is gold, right? So it's a tier one asset alongside of treasuries that all the central banks have been dumping treasuries and buying the other tier one asset, which is gold. Look at last year's performance, up 40% on gold and 4% on the treasury. No counterparty risk. And so what is happening right now is that gold is being reintegrated. And then Trump comes out last night on Easter Sunday with a tweet on Truth Social, and it says, let me just read it verbatim. I'm sure a lot of you have seen it, but for those of you who haven't, he says, "The golden rule of negotiating and success, he who has the gold makes the rules. Thank you." And that was at 3:09 p.m. on Easter Sunday. What the hell does that mean? Does that mean what we think it is? Is Judy Shelton right when she told me on my interview, Andy, Trump will issue gold-backed treasuries July 4th, 2026? He's told me that, 250th anniversary. Richard, that little bird, I don't think is right. You know, you have JP Morgan, who was always the custodian of SLV, which I thought was as stupid as a mud wall, because they paid the largest fine the Justice Department ever issued for manipulating the market, $920 million. And they're still, they and BlackRock, allowed to be the custodian of SLV. They just took over primary custodianship of GLD. So JP Morgan, in two vaults, one in London, one in New York, that they control, has more gold than most of the G20 nations. So is this what we're doing? And who would it benefit as gold goes higher but the central banks? You think the BIS clued them in that this is where things are going? Start buying gold, start bringing it home. Things are nuts, man. When you know, John says that's why they want lower interest rates. He's talking about the Treasury, $6 trillion come due next month. And it's interesting, by 2028, $28 trillion will have come due. And best case scenario, we take in $5 trillion a year in tax revenue. That's $15 trillion. That's halfway there. That doesn't take into account the deficit spending over the next 3 years. How do they refinance it? Is that why he is pushing these tariffs on countries like China? And it's important to understand there's something called the Triffin's dilemma. And Triffin's dilemma says if you're the world reserve currency, you must run trade deficits because the world needs more dollars than you can sell in products. And we don't sell shit anymore except financial assets. So we will have a dilemma, or a Triffin's dilemma. We will have a trade deficit. But not only that, the countries who he's threatening. Now, mind you, I think what he's doing is very noble. We can't rely on China for all of our medication. 98% of all of the pain medication, the heart medication, the blood pressure medication, the penicillins, all that stuff's made over there. The rare earths, they're already stopping. What if they stop the medication? And we have big problems. But more relevant to all that, it's these countries who sell us their goods cheap for paper dollars, which you could argue is immoral. And then they take the proceeds and they buy treasuries. Now, we expect them to use the dollar as a world reserve and reinvest in treasuries, which keeps our interest rates low, our asset prices high, our goods cheap. We're moving away from that. Is that really what we want? That's what he's trying to do. And it is noble to try and reshore things, but it's going to create a big mess. But the question is, how can you have low interest rates at the same time deal with inflation? And the answer is you can't. And that's why Powell just came out and said our dual mandate of full employment and low interest rates, we're going to have to abandon one of the dual. We're going to have to abandon one of them. Right. They'll get rid of inflation. They'll give up on inflation to maintain a stable economy, right, and not let the businesses blow up and have people, give them jobs, which means they're signaling to you that inflation never was transitory. It's just getting started. This is one of the reasons why people don't want our treasuries. This is the reason Judy Shelton says we need to peg it to gold. And she said to me flat out, Andy, Trump told me on July 4th next year, the 250th anniversary, he'll issue these gold-backed treasuries. Is this why they're importing all of the gold under the guise of tariffs? Is this why we're seeing comments like Trump saying he who has the gold makes the rules?
What does that do to gold?
It pushes it up to a level that no one thinks possible, and it pegs it. It'll never come back down. And you're seeing this exact same thing in China. They just came out with their new renminbi cross-border bridge. It's the M bridge. It's the technology of M bridge. They've connected, China did, with I believe 11 or 12 of the ASEAN countries in Southeast Asia, along with 5 or 6 Middle Eastern countries, represents about 40% of GDP, and it now can trade outside of SWIFT. And Lavrov, the finance minister from Russia, said something really big for all you BRICS naysayers. He said the new system that we will issue will be open to non-BRICS nations as well. Now, think about the Belt Road Initiative that China uses. 75% of human population, 50% of global GDP. They are not all BRICS countries, of course. Most of them aren't, but they're aligned with China and the BRICS. Think of the Eurasian Economic Union. They're not all BRICS countries, but they are aligned with the BRICS. So you're talking the majority of human population will have the ability to trade digital renminbi over this new bridge system, which sidesteps SWIFT. And then at the same time, they will settle imbalances in gold. And this is like the unit settlement token, which they've told us is 40% gold back. That's coming. In the meantime, they're just using physical gold to offset imbalances in currency or in trade surplus, negative, plus or negative. It's happening. And you're talking about the majority of the world. It doesn't just have to be BRICS countries. That's a big, big deal, y'all. And maybe this is why gold is quietly rising. Now, I was watching the other day at gold at all-time highs in the gym, CNBC, on the elliptical machine, and they have these boxes that spin underneath the moving ticker, and gold came up, and I'm watching it, and like, something's not right here. So the next time it comes up, I watch it. These boxes flip every 5 or 6 seconds, like NASDAQ, Dow, S&P, and gold's at all-time high, and it says gold 3250 or whatever, and then I count, and it's 47 spins of that box before it comes back up. In the meantime, Bitcoin came up 9 times. 9 times as many references to Bitcoin, which is, $40,000 or more off its all-time high, and yet gold's at its all-time high. No one talks about it. Yeah, there's some people noticing it, but the average person has no idea. We're nowhere near the end of this rally. And the fact that the mainstream isn't talking about it kind of makes me feel that even more strongly about that position. I think gold will go higher than people think possible. And if Judy's right, we will see it rise continuously into next year. Gold is nowhere near overvalued. The reason the price is the way that it is because of the rehypothecation. Let's look at London as an example. London is a T+1 settlement exchange where T is the trade day +1. The metal should be moving your way in 3 days. They've switched to T+8 weeks because there's a shortage of trucks. Really, the Bank of England can't get enough trucks to move people's metal. It takes 8 weeks. It's just about as close to a default as you can get. And they have somewhere in the neighborhood of, when we talk about the float, about 36 million ounces that stands behind 280 million ounces in spot contracts. So, you have, or over 300 million in spot contracts. In other words, you got 10 to 1 paper versus physical. And that's really the problem, is that the ability for these banks for all these years to naked short has distorted the real price. And so the BRICS nations and the central banks have been slowly exploiting that and standing for delivery. So, this is a situation where, they have accumulated so much gold, and there ultimately is a shortage of good delivery bars, 400 ounce. On COMEX, there's way more paper contracts than there are bars standing behind it. So this is something I've always admired the BRICS for, how methodical they are in accumulating metal instead of just throwing everything in the kitchen sink at it, which would blow up the whole system. They've been using the manipulation of the West, the stupidity of us to do that, the hubris against us. Now they're building the BRICS the BRICS Precious Metals Exchange. But remember what they said with the BRICS Grain Exchange a year ago. The guy that was building it says, look, we produce and accumulate or produce and consume rather more grain than the West does, but we can't control the price. It's controlled on COMEX. But with the development of this new grain exchange, that will change. They know what we're doing. They know exactly what we're doing, and they're using it against us, doing it in a methodical way. And now you're seeing things begin to break. When the London Metals Exchange goes from T+1 to T+8 weeks and saying it's trucks and manpower, they can't load gold and silver fast enough, that's about as big a bullshit call as I've ever heard. And it is showing the strains in the system. Because you want it to be volatile to keep the average folk. Oh shit! You see how that's coming down.
Yeah.
I tell the story. My parents had a dog that they got from the pound, and every time myself or my dad would walk around it, it was happy. It loved us. But anytime a woman got near it, it would go like this. Like obviously, its last owner was a woman who beat it. And that's how all of us feel who own gold. We're waiting for, to be beat down again, because that's what we've all endured. My whole career, that's what's happened. But it's so different right now, where 2 days ago it was down 40, $50. And then yesterday it's up 110. Today, the volatility, but it continues to march higher. And when I was in Europe a few weeks ago, it goes down $200. And that's the end of it. That's the end of it. And then it goes back up higher than where it was. It went up over 300. So I guess I would just simply say that to expect it to be easy, it won't be, because they want to keep as few people off the bull as possible. The bull wants to buck you at every chance. And this is where you have to have strong fingertips. You have to look at the big picture. The most influential money in the world is telling you this is coming. President Trump maybe just hinted this is coming. Don't let the bull throw you off. Don't buy it to get rich. Don't buy it to get wealthy. Buy it because it is wealth.